Hi, I'm Tim Sustak, Chief Credit Officer with Vizo Financial, and this is your FOMC update for July 2021. No real surprises in a statement following the July FOMC meeting. The committee maintained their current Fed funds target range at a level of 0 to 25 basis points, and the rate on reserve balance is at 15 basis points. Effective July 29th, the Fed amended Regulation D to eliminate references regarding an interest rate on required reserves and an interest rate on excess reserves, and replace them with a single interest rate on reserve balances. In the post-meeting statement, the FOMC also maintained their commitment to increase holdings of Treasury securities by at least $80 billion per month and agency mortgage-backed securities by at least $40 billion per month. They also indicated the economy and employment situation have continued to strengthen, but that sectors most hurt by the COVID crisis have not fully recovered. In relation to tapering Treasury and agency holdings, the committee said the economy has made progress toward its maximum employment and price stability goals, and the committee will continue to assess progress in coming meetings. We'll review Chairman Powell's press conference to see if he gave any more information about the FOMC's plans after the break.
I would recommend this to any credit union management staff. There's a lot that they can pick up here from their peers, and I would recommend folks come every year.
I feel like I always take back something to my credit union that is useful.
Whether you're a $1 million credit union or you're a $100 million credit union, I recommend it to all credit union sizes, and it's beneficial for everyone.
I would definitely recommend this conference to other credit unions because the topics are relevant to what everybody is dealing with, the current economic situation, the current regulatory situation.
It's always a learning experience here.
Welcome back. Looking at Chairman Powell's press conference, both his prepared remarks and a question and answer session, I think there were two important themes. The first is the committee continues to believe the inflation we're currently experiencing is transitory. And the second is though the committee is discussing asset tapering, we're not quite at that point yet. Regarding inflation, the chairman said with the economy reopening and spending rebounding, there has been pressure on prices, particularly from supply bottlenecks in some sectors. He indicated the effect of those bottlenecks has been larger than anticipated, but the committee still believes that these transitory supply issues will clear up and inflation will drop back to the FOMC's longer-run inflation goal. The chairman explained that the current inflation readings are really being driven by a handful of goods and services related to the economy reopening. He acknowledged that near-term inflation risks were probably to the upside, but said the committee is still convinced inflation should moderate in the midterm. However, he did mention that if supply bottlenecks, hiring difficulties, and other constraints continue to limit supply adjustments, there is a possibility that inflation could be higher and more persistent than expected. He said if the committee sees signs that the path of inflation or longer-run inflation expectations are moving materially and persistently beyond the committee's goals, they are prepared to adjust monetary policy appropriately. On the subject of asset purchases, the chairman indicated that this was the first meeting where the committee really did a deep dive and discussed how asset purchases might be adjusted regarding timing, pace, and composition. He said we're not at the taper point yet, but that in the coming meeting, the committee will continue to assess the economy's progress towards its goals. As in prior communications, he indicated that the timing of the tapering will be dependent on the incoming economic data and that the committee will provide notice before making any changes to asset purchases. So, the FOMC is pretty firm in its belief that inflation is transitory, but there seems to be increasing sentiment in the marketplace to the contrary. Only time will tell who's on the right side of that bet. More certain is that asset purchase tapering looks to be getting closer, evidenced by the talks the FOMC is having, as well as what's happening in the economy. That's the FOMC update for July. Thanks for watching, and be well.